So good morning. It is Friday, February the 5th. Thanks everybody for joining us. A couple things to wanted to talk about. Number one is that tomorrow is the 50th anniversary of Alan Shepard playing golf on the moon. So for our golf aficionados, that ought to mean something. But it's important this weekend because he took 4 shots. He missed the first 2, just like I would do. On the 3rd shot, he hit it about 25 yards. On the 4th shot, he hit 40 yards, which doesn't sound like a lot, but he was wearing a 200-pound spacesuit at the time and playing from a sand trap basically the size of Kansas. So to hit 40 yards is pretty awesome. The important part about that is what he was trying to show is the difference between gravity of the two places, Earth and the moon. His loft time for that shot was right at 30 seconds. So from the time it left the club to the time it landed again was 30 seconds. Now to keep that in perspective, Tyreek Hill runs 40 yards, about the same distance, in around 4 seconds. And the biggest guy on the team, an offensive guard, runs at 40 yards in about 5.5 seconds. So put that in further perspective on Sunday. If Patrick Mahomes takes a snap, steps back for 2.5, 3 seconds, throws the ball out to Tyreek Hill or Travis Kelce, they're 40 to 50 yards away, and that entire thing is taken about 6 seconds. And the golf ball that Alan Shepard hit was in the air 30 seconds. Pretty amazing. So being a space nut, that was kind of important to me, and I thought the golf guys would appreciate it. It's been a big week. So I'm going to address right away the GameStop thing, and it's kind of important here. We still get a lot of questions about it. This is the pricing from the beginning of the short squeeze all the way through the close last night. And you can see it started out at 76.79. And then you had that Wednesday where it popped, and there was a lot of interest in it, where it went to 347.51. At the close last night, it was $53.50. The incredible part about that is it's now down 30.3% since Monday the 25th. My concern, well, I've talked to a couple people and they think it was great that, a lot of people making a lot of money, but what they forget is on Wednesday, there were a lot of smaller investors buying into GameStop at 300 because they thought that was a good idea. And that ends up, that wasn't a really good decision. So following the herd's probably not a good decision. And all of these, you can look down the list and you can see AMC is still up. And the only thing about that, AMC was already down at 442. The fair price on that's probably, I'm not, honestly, I haven't done a good analysis yet, but they just took out a $900 million loan to try and keep in business. Not sure that is the right way to go. And then you've got Nokia, and in full disclosure, Nokia is the only one we had a position in our accounts. We held quite a few shares. We decided Wednesday to sell it. We did not use options, calls, or puts to do that. We just held straight shares of stock. On Wednesday morning, we saw the stock pop. We felt that that was an anomaly, so we went ahead and sold it on Wednesday morning. And now it's trading at 9.9% below where it was on Monday. So now remember, the most important part about this is nothing we talk about is a recommendation to buy or sell any securities. It's just out of interest that we show this. We hold no position in any of these right now. We hold no options, no puts, no calls on any of these holdings. But for the interest and what people are looking at, we wanted to show this is what they've done, and this is where they are. And this is why you should really get some good financial advice before you make any decisions to invest in these kind of movements. So this is the Dow Jones Industrial Average. Now, look over here on the far right. We can see that we had a dip. We went down a little bit. And that's not totally unexpected. But if you look back to where we were 12 months ago, you can see we're still high. And look back again where we were when the COVID hit, which honestly was about a year ago this week when we started seeing signs that we were going to have an issue. So since that area that Mallory's pointing out right now to today, we're up a significant amount. Since this yesterday was the 60th consecutive day where a moving average was positive. I think we can kind of declare that we're over the COVID issue. And now it's a matter of, can we keep it in check? Can we keep going? But what we had happen, the COVID is essentially over with. We recovered from it, and eventually that'll start fading from our memory. So the issues again still are vaccine, second virus, things like that. This is our international movements, and you can see that everybody is positive. This is year to date. The only ones that, again, what you've heard me say before, I'm a little concerned about the recession in the United Kingdom, and you can see that in their performance. They're only up about 0.67%. Everybody else has got a pretty solid return. And again, I always point out NASDAQ is information technology heavy. That's up almost 7% already this year. I'm not sure that's sustainable, but they definitely are leading the pack, with the exception of Hong Kong, which is right on their tail. So this is generally what it's about. Belgium 20, that's a commodities index. And so I have it on there for particular reasons for us. We want to look at commodities, what are things going for. And if you want to know how commodities work, go watch the movie Trading Places. The last 15 minutes is awesome. But Belgium is mostly commodities. So this is how the world is going. We're all positive right now. That's a good sign. And let's see how long that lasts. This is our unemployment claims. I'm tending right now to focus a little more on the daily movement. And the reason why is it's staying above 700,000. We need that daily movement to be down about 200,000 filings per week. That's a weekly movement, I'm sorry. It dropped down a little bit more than the economists thought it would this week, but it was still comfortably above 700. And so we're kind of paying attention to that, where we're going right now. This morning's employment rate came out, and unemployment is holding steady at about 6.7%. And you'll recall from my forecast, that's where I kind of think we'll still be there at the middle of the year. But right now, the unemployment claims are staying pretty solidly where they are. I would like to see that blue line drop down some more, but it looks like it's going to take a little bit more time, and it probably won't happen until we're comfortably into or out of the winter season. And this is our sector performance on how we're doing. The first column is how we did in 2020. The second column is 2021 year to date. And we've added in that trailing 12. And remember, as a reminder, that trailing 12 is going to change over the next 4 to 6 weeks because it's going to take into effect that first 4-week drop in the COVID crisis. So these numbers are going to be kind of an anomaly as we go forward, which is why we're showing the 2021 year to date. It's a little more realistic, but we still want to see where we are year on year. And you can see that the areas of oil, gas, and energy is still down. It's still trailing the pack, but year to date, it's up 11.1%. So we're seeing some shines there. Mark and I sat down and we made some adjustments in those sectors. We increased oil and gas a little bit. We actually stepped back on technology and telecommunications. We kept where it is. So this is how we're going for the year, and you'll see those numbers develop a little bit better, but these are the things we're watching right now. Our volatility index, if you look back at the back, we've talked about this before, the volatility index kind of precedes stock market movement. We saw it creep up as we were going, and then sure enough, we hit that bottom. You're seeing spikes as we move along. You saw a spike last week that popped up. That was GameStop. That was all of that, which causes that bump up. What I look at here is the 14-day moving average, which is the blue line. It brought that up a little bit, which I really don't like to see. I would like to see that blue line down around maybe 12. Ideally, I'd like to see it below 10, but that's pretty aggressive. So as long as it's up there, there's a little bit of concern, but it's a pattern that we can see and we can identify. It's something to watch. If we see it start popping up like this again, how we were back in early March, then obviously we're going to be concerned. But right now, I'd still call it volatile. It moves around a little bit more than I'd like to see it move. So we're keeping an eye on that. And the next slide is the pandemic effect. I want to keep this in perspective. This is 2019. So again, this is 2019, where we were on the opening market day, where we were on the last trading day of the year. So in 2019, the Dow Jones Industrial Average was up 25.8%. We hit the 2019 high just before the end of the year, and then it dropped down just a little bit, but that's how we did in 2019. This next slide is a little more indicative, and we'll keep updating that. This is January 20, and it shows the pandemic effect where we hit the low right around March 23rd. We ended up the year up 6.0% on the Dow, but the thing that's really phenomenal is, to me, is once we hit that bottom on the 23rd, our recovery was up almost 65%. So if someone dropped money in the market on March 23rd, they're pretty happy with how 2020 went. If someone got out of the market anytime before March 23rd, they're probably relatively unhappy because they missed that comeback. But that comeback was a pretty phenomenal move. And what it's showing me is that the Dow Jones average, the stock market itself, is kind of starting to separate from the overall economy. They used to go hand in hand quite a bit, and you're starting to see them separate a little bit. That's not a bad thing. It's just a comment that I'm seeing the stock market movement and the economy in general are starting to run their own course. And we're paying attention to how that's going. On this next slide, The effect is that we know it started around February 24th when we lost 1,032 points that day. The average daily movement remained negative until this past November 9th, with that one exception. So I do calculations where it shows the average daily movement. I go back quite a while. I go back 12 months and I go back 5 years. But now it's important to note that the average daily movement went positive 60 trading days ago. That's as of the close last night. And that goes to my comment a few seconds ago that I think this tells us that the COVID issue is over. Is it gone? Possibly not. It could recur again. We got notification last night the Olathe School District is going to go back all live, everybody, on March 1st. So their numbers are indicating it's okay. We're averaging 3,000 deaths a day still. That's down, which is still an amazing number. So it looks like this is waning a little bit, and we'll see if that holds. If it does right now, then we could declare this finished, and we've got 60 positive consecutive trading days, which is pretty good. The next slide is my forecast. We're going to take this off next week. I'm not going to keep showing you. I'm still holding these numbers where I want them. 6.2. Again, today we're at 6.7. I think July 1st at 6.2 is probably pretty accurate. I think we get down 5.5% by the end of the year. My Dow Jones is at 33,000 right now. We're just a fraction above 30. The S&P 500, I'm saying 42. We're at 3871. So that doesn't sound like a lot, but it actually is quite a bit. NASDAQ 15,000, we're now at 13,778. So we'll see how those go. I think it's going to be kind of a slow year, but I reserve the right to amend that as we go. And then this is our calendar coming up. Something's going on February 7th. I know it's going to be darn cold in Kansas City, but in Tampa, it's going to be 76 degrees. A slight chance of rain, but not much. President's Day, the markets are closed, stock market, bond market, all trading, and the bank is also closed. We have daylight saving time starts on the 14th. Spring break for most schools. And then for me, it's important. St. Patrick's Day is coming up the 17th. By that day, we'll have some FOMC notes from their meeting on March the 16th. And we should have some affirmation to find out if Jerome Powell will stay as chairman. And I expect that to happen. End of the quarter is March 31st. And then on Good Friday, that's something else that's interesting in our market, in our business. Good Friday, the stock markets are closed, the bond markets are closed, the banks are open. So it's a little odd, but we will still be here, but no trading will be done that day. So that's the end of the program for today. It's enjoyable. Everybody stay warm this week. Thanks so much for joining us. And we'll be back here next Friday morning at 8 o'clock. Take care. Have a fun week.